Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trading session and so far this week, despite yesterday's fall, Nifty is still in the green with about a 0.3% gains as of now. But yes, we'll be watching out how today's trading session pans out, given we will continue to see stock-specific reaction as companies report their second quarter performance. For now, the GIFT Nifty is indicating a positive start. However, a flat and a quiet start is likely for the markets as well. If you look at the global picture, that has remained mixed. If you look at the overnight, we did see US markets ending lower. Nasdaq was down by over 1.5%, given that investors digested big tech earnings as well. We did see Alphabet shares rising, but shares of Meta and Microsoft that tumbled because investors were worried about the increased spending outlook by both of these companies. Other than US markets, Asia Pacific markets, they were fairly better than the Wall Street. Japan's Nikkei hit a record high. South Korea's Kospi also were at all-time high levels as well. China, in fact, those markets were weak after weak October manufacturing data came in, where manufacturing has plummeted to about a 6-month low for the month of October as well. So all in all, it was a mixed session that came in from the global markets. Now, how will our own markets will take all of this is something we'll understand from our experts as well. We'll also take in your stock related queries, so keep posting them on our live feed and we'll take them up shortly as well. But before that, let's take a quick check of the top headlines, sir. Stocks on Wall Street end lower as investors digested the lack of clarity of trade deal between US and China, as well as big batch of tech earnings. Stocks of Meta and Microsoft end lower as investors worried about increased spending outlook. Asia Pacific markets have opened largely higher following a meeting between Donald Trump and Xi Jinping, with Japan hitting record high. Meanwhile, the GIFT Nifty indicates a flat but positive start for our own markets. Oil heads for a third straight monthly decline as stronger dollar caps gains. Gold prices rise on the other hand following Federal Reserve's rate cut, while investors assess the outcome of a trade deal between US and China. And in major earnings, ITC reported a steady quarter as profits and margins beat estimates on the back of FMCG and cigarettes performance. Also in key earnings, watch out for second quarter performance from Bharat Electronics, Maruti Suzuki and Shriram Finance. And in the primary markets, the much talked about Lenskart IPO opens for subscription today. The company raised over 3,200 crore rupees from 147 anchor investors, and 35% of allocation is being done to 21 mutual funds. And in the Indian women's cricket team makes history faced with a record run chase in women's ODI. India rode on an unbeaten 127 from Jemima Rodriguez and 89 from Harmanpreet Kaur to hunt down 339 target with 9 balls to spare. The team has booked their spot in the Sunday's World Cup final. All right, if we look at yesterday's trading session, Nifty did fail to hold that 25,900 mark and slipped over 170 points, and nearly 40 stocks in the Nifty ended in the red as well. Pharma stocks led the drag yesterday. We did see decline coming in from Dr. Reddy's and Cipla, and we'll be watching out how they react in today's trading session as well. But yes, it was a broad-based selling picture in yesterday's market. All of the sectoral indices did end in the red. Financials, Pharma, they were the worst hit sectors in yesterday's trading session. But yes, some resilience came in from the broader end of the markets. Midcap and smallcap indices outperformed the benchmark headline indices. However, they were still in the negative territory as well. But yes, Q2 and the stock-specific reaction will continue in today's trading session. We have Maruti Suzuki, Bharat Electronics, which will be coming out with its second quarter performance today. And of course, in the primary markets, Lenskart will be starting their IPO subscription today. 78 crore rupees of IPO will be opening today. And of course, the month of November is also going to see a huge lineup of IPOs from the primary market. So we'll be watching out for some names that is coming from the IPO activity as well. But yes, coming to the cash flows positions, FIs, they were the net sellers of stocks, which they sold stocks which was worth about 3150 crore rupees in the cash markets. DIIs bought stocks which was worth about 2500 crore rupees in the cash markets itself. Nifty put call ratio falling to about 0.75 from 1.14 levels in the previous session, and the stock that has been removed from the F&O ban, that is your Samman Capital, and no new stock has been added nor has been retained in the list as of now. But yes, if you look at the pre-open rates are suggesting quite a quiet start for the markets. Sensex, if you look at Sensex is up by about 20 points. Nifty is also up by about 16 points as of now. So we could be seeing a very quiet start and a very flat start for the markets. But we'll watch out if there is any pickup from there on. But yes, to understand how the trade setup looks like, let's quickly get on board with our technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, good morning. Nifty yesterday failed to hold above that 26,000 mark. And what can we watch out next then?
Yeah, good morning, Lovisha. Thank you for inviting me to the show. And we have been noticing that, yes, the varied attempt to move higher has not yet, given the result which all of us were expecting. So, yes, a move above 26,000 is what one is anticipating. But the anticipation soon dies down by the end of the day. So, yes, we have only seen one confident move, which was day before yesterday, and after that we are not been able to actually hold on above those levels. So now what we really need to see is a move above, I would say, the somewhat high, and I would say that that would be a crucial encounter which we have to face. So you can say 23rd October high is a very critical high which I am marking for the coming days. So unless and until we get a close below 25,800 on the Nifty spot, I don't think we'd have to worry so much as of now. Yes, the markets are definitely getting some supplies at higher levels. So probably what is emerging right now is that the positive Q2, which was not visible in the earlier quarter, is now getting factored in, and that is what is leading to a consolidation phase. So there is some bit of sector rotation which is happening. One day it is IT, one day it is metals, one day it is pharma. So what we got to do is we got to mix our plays here, or go for select stocks that are performing well post the results on the upside, or reacting negatively to the results on the downside. So now there is definitely lack of clarity, and yes, especially after the FOMC meeting, which is also one of the most talked about event in the current week, we can see that yes, that particular event has gone by, and the hawkish statement which was made by the Fed chairman Jerome Powell has definitely caused some heartburns here, and the divided stance which has been maintained in the US government itself definitely calls for everyone to be on a cautionary note. And that is what is causing this kind of turbulence right now. And plus, there are a lot of other geopolitical news flows which keeps on coming through, and that is not giving us the sense of confidence yet. So what I would say is, wait a while if you can. If you want to trade, then Nifty is definitely more bearish than Bank Nifty. So if somebody has to give us a cue, it should be Bank Nifty. And for Bank Nifty to give us a cue, I would wait for a move above 59,000 to be more comfortable. While the PSU banks are leading the race at the moment between the private and the PSU, I would still say that we have a mixed bag right now. So as we end this week on a rather confused note, I would say that it is better to wait on the sidelines, wait for the 23rd October high to be crossed before taking any more bullish stance. Now, if you want to buy on dips, okay, so the Nifty levels which I am tracking is much lower, because if 25,800 breaks, if it were to break today, then you can expect a support towards 25,600, where I can definitely see that a lot of confluence supports are emerging, and a lot of people will come in to buy, because that's a healthy correction from the highs, and that could be a good point to enter. So if you're looking to buy on dips, it's definitely a buy on dips market, and the dip level in Nifty would be 25,800 is the first level of support, which is the immediate support, and all these levels are from the spot. So now the next level would be 25,600. So let's track these two levels as we go into the day. It's the trading day of the week. The Nifty is definitely pressured, and if markets were to go down, then Nifty will be the main culprit.
Okay, all right. Buy on dip strategy that we need to adopt as of now. But yes, Raja, let's get in your views and levels for the Bank Nifty index as well, because after 3 days of rally yesterday, we did see a pause for the Bank Nifty index.
Yeah, so Bank Nifty has been much faring much better, and this has been a trend over the last 6 months. Bank Nifty has not stopped performing; it just slipped into the sideways phase in the September October phase. After that, Bank Nifty has been steadily moving higher. While now what we can see is that yes, there was a pause yesterday, and the gap which was formed over the last few days will definitely be an important area to consider. So that will be closer to the region of again around the 58,000 mark. So based on the option data also, there is a lot of put writing at those levels. So that could come in to defend any reaction in the bank nifty. And all the associated sectors are seemingly doing well, like the real estate, autos, NBFC. So I would say that bank nifty could definitely play a more important role in the coming week and ensure that the November series also emanates the same kind of response and the vibes which we saw in October.
Okay. Raja, yesterday we did see some of the pharma counters, lagging in the market, and they were one of the worst hit sectors in yesterday's trading session. So, how do we approach going ahead? Of course, we did see some news-based counters that came in from Cipla, and then we had Dr. Reddy's, where the delay of the drug also, led to the sentiment negative reaction also in the stock. But yes, going ahead, anything that you're watching out from the space?
Yeah, so especially when you talk about the pharma space, they are extremely erratic, I would say. Rather, they are quite volatile in nature because of the constant US observations and the reactions, which are primarily, reflected on the screen is largely because of some overnight positions, especially by the large holders. Now the people who are going to trade it are not in those line of thinking. So whatever has to be done gets done, and then the price actually comes up, but then people are having a view and they're ending up on the short side. So what I would suggest is anytime there is a knee jerk reaction, you take a look at the overall picture. Overall picture still continues to be positive. IT and pharma are definitely one of the most beaten down sectors. So any dip you get in these stocks should be actually bought into. But then on contrary, people are trying to sell into these names. So now, if you want to buy into the pharma names, unlike the big ones like say Dr. Reddy or Cipla, I would rather go in with Fortis or the Laurus Labs that shows more promise and that has been able to weather the storm in the pharma space and has been showing some steady upward drive. So if I were to pick any two pharma names, it would be Fortis and Laurus Labs.
Okay. Fortis and Loris Lab. Also, Raja, let's get in your picks as well. You've suggested it's a buy and dips market, but what is looking attractive to you?
So when I take a look at the current market scenario, I can see that there is constant improvement seen in the IT and persistent after results definitely conjures up some bullish momentum. Yesterday, also toward the close of the day, while market was in red, it was seeing some upward traction. So I would love to go with a buy in persistent at 5965 with a stop at 5900 for a target towards 6150. And second stock which I would like to suggest is a buy in KEI. After the results, the stock saw a sharp decline, and the prices seems to be now forming a base. And I would say that this is a good level to enter into this stock. Buy it at levels of around 4130 with a stop at 4100 for a target towards 4180.
Watch out for. But yes, before we get to the market open, we did see some earnings reaction that came in. And of course, we'll be watching out for those of the counters. Swiggy and ITC, both of these counters we'll be watching out in today's trading session, given that Swiggy's net loss had widened to about 192 crores. ITC, on the other hand, had reported some steady Q2 performance, and brokerages have largely retained a bullish call on the counter as well. So we'll be watching out for both of these earnings reaction. But yes, coming to the first trades coming on your screen, Nifty has started quite in the red. Below that 25,900 mark, it continues to remain below those levels. 25,862. That is the first trade coming in for the Nifty 50. Sensex is also open quite flattish in the trade. Bank Nifty flat with a positive negative bias. Mid caps, however, showing a bit of a resilience compared to yesterday as well. Flat with a positive bias. So all in all, it's a very quiet start for the markets, and we were hoping that it's going to be a quiet start for the markets, given that the backdrop of the global cues have also remained quite mixed. US remained on the back footing. However, Asia Pacific markets saw some mixed reaction on the back of the closure of trade deal between US and China as well. But yes, let's take a look at some of the other sectoral gainers and losers. Nifty Auto Index is showing a bit of a resilience after yesterday's fall. 0.1% decline, 0.1% gains coming in for there as well. If you look at some of the other sectoral pockets of how other sectoral pockets have been doing, Nifty Pharma index, like we were talking about earlier yesterday, and of course today as well, that there is some decline seeing and the pain continues in the pocket. 0.2% declines coming in from the pharma index as well. Nifty IT index showing a bit of resilience in this market. Nifty FMCG particularly has been holding up well with about 0.3% gain. On the other hand, if you look at some of the other losers in the market, that continues to be your Nifty Realty index, flat with a negative bias as of now. So all in all, it's a mixed session as from a sectoral perspective, but yes, a negative session to start off with. You can, if you refresh the rates, of course, Sensex now down by about 100 points, and Nifty is also below that 25,850 mark as well. Let's take a look at some of the top gainers and losers on the Nifty 50. Maruti Suzuki doing well ahead of its second quarter performance, seeing a gain of about 0.3%. Yesterday also Maruti Suzuki did well. Today also it's retaining its positive performance. Dr. Reddy's Lab, after yesterday's fall of about 4%, today showing flat to a positive start. Reliance Industries doing well, 0.1% gains coming in for there. ONGC and SBI Life, some of the other gainers on the Nifty 50. However, on the losing end, let's take a look. NTPC not doing well with about 2% fall after its second quarter performance, which was quite flattish across majority of the parameters. Max Healthcare not doing well once again. Cipla once again extending the loss on the back of its weak Q2 performance. Shriram Finance ahead of results, 0.5% decline coming in for there. Tech Mahindra and Apollo Hospitals also not doing well. Hindalco and Tata Steel, some of the other losers on the Nifty 50. But yes, let's take a look at Swiggy on how the counter has been doing, given that it did report its second quarter performance, where the net loss had doubled to about 192 crore rupees in the second quarter. Revenue, however, grew by about 54% in the second quarter. But yes, the stock has been doing well today because the brokerages have remained largely positive on the counter. If you take a look at the brokerage of CLSA, they have given out an outperform call on the counter. They believe that the food delivery was better than take rates despite the slight EBITDA miss. Jefferies have also given out a buy call on the counter because they believe that the strong food delivery growth and margin expansion was quite positive from the second quarter as well. They've given it out a target price of about 500 rupees per share as well. But yes, coming back to you, Raja, the stock has been an underperformer so far this year, but in today's trading session, it has been holding up well with about a percent gain.
Yeah, so see, this had to happen because the entire focus has been on Eternal for a very long time. So now there is always going to be some follow up on the other names from the quick commerce space. So Eternal has run up quite a bit. So I feel that in few weeks from now we can see the bullishness in Swiggy rev up, because if you see over the last few months itself, the stock has been steadily staging an upward drive, and like you rightly mentioned, the brokerages are focusing on how it's able to hold on to the current scenario. And we can see that the stock is consolidating now and is offering a good price point to enter. If you want to participate in a stock from the quick commerce space, then Swiggy is a much better bet than Eternal, because Eternal, after its sharp rise, could witness some profit booking. Yes, Eternal is also good. Between Eternal and Swiggy, Eternal is definitely better, but I would wait for some pullback in Eternal to buy into rather than at current levels. But Swiggy is at the right spot.
Okay, right point to buy in the current market. But yes, given that we're talking about the earnings season as well, let's also address about ITC, because we did see that the net profit is up by about 2% on a year-on-year basis. Revenue, however, has dropped by about 2%, and EBITDA has been up by about 2%, and margins have risen by about 185 basis points in the second quarter. If you look at the brokerage reaction, that has remained positive. Jefferies have given out a buy call on the counter, target price of about 535 rupees per share. They believe that the cigarette volume was up by about 6% on a year-on-year basis. FMCG growth has improved, and EBITDA growth, though muted at 2%, but the outlook remains quite positive for ITC. Citi has also given out a buy call on the counter because they believe that the cigarette growth volumes and the category has been expanding in a stable tax setup, and that gives a positive re-rating for the counter going ahead as well. But yes, the brokerage firm has given out a target price of about 500 rupees per share. Right now, the stock is trading at about 421. 0.5% gains coming in for there as well. Raja, let's get in your views on ITC. Past 1 month, the stock has done well. Today is holding, it's holding, flat with a positive bias. What can we watch out next from ITC?
See, the consumption sector remains mixed, and ITC amongst them has been on a declining phase for quite a while now. Now the stock has been in a consolidation mode. So what the stock is definitely from a short-term to medium-term investment perspective. Now even on that front, the stock will demand a lot of patience, and that seems to be a key element in the current market scenario. So now when you take a look at the overall scenario and when you take a look at ITC, you feel that ITC is definitely going to test your patience, and the stock is at a point where it is showing some signs of reviving. But then, if you're looking at the current market scenario, there are a lot of sectors that are available. So, yes, it was a darling for investing over a period of time. But then now, if you want to invest into this, the most important element while investing into ITC is patience more than capital. So that should be the first call which a reader or viewer should take before investing into ITC, because ITC is definitely going to test your patience. So I would say that there are better names, but yes, ITC is showing signs of recovery, and that's all I have to say about ITC.
Okay, showing signs of recovery for ITC. All right. Let's move on and take some of the viewer queries that is dropping on a live feed. Then the first query coming in from Preeti. She's asking the view on the Eternal and Nykaa for a fresh entry position at current levels from short to medium term. Of course, Raja, you did mention about Swiggy being more favorable than Eternal at current price levels. But yes, on the levels front, what can you watch out for Eternal, and of course, your views on Nykaa as well?
Yeah, Eternal Nika are also amongst my top investable candidates. But then the current levels for Eternal would be closer to the region of 300 is where I would say that it offers us a good opportunity for us to consider. And Nika has been in a runaway mode for a while. So I would say levels of around 230 would be a good spot to consider Nika. So at the current juncture, yes, if you between Eternal and Nika, you can do in Nika, you can buy at current levels and also parcel it by adding on the dips towards the 230 region. So that is where you can do a parcel approach, but in Eternal, I would suggest a buy on dip approach.
Okay, buy on dip approach, of course, for Nykaa. Let's take another viewer query. We have Naveen who's been asking the view on Canara Bank on how does the long term or how does the medium term charts look like for Canara Bank. Raja, the stock did well yesterday, up by about 4%. Today also it's holding up well. And yesterday we did see the stock reach about 15-year high. So what can we watch out next in terms of target levels?
Yeah, so like I mentioned that in the bank Nifty, the PSU banks have been leading from the front, and in the last show, I had mentioned that I always talk about SBI, Bank of Baroda, and Can Bank, and I've added Indian Bank now into that list. So yes, Can Bank did undergo some consolidation, and the last two sessions have been quite strong, which is a clear sign that strong bullish momentum is emerging, and with the kind of volumes that are being generated, we can consider that it's a good opportunity to buy into, yes, at the current levels. So your risk would be closer towards 125. So if you feel that at the current levels you also want to add on dips, then the dip level would be closer towards 131.
131 that we can watch out for Canara Bank. Let's move on and take another viewer query. We have Naveen who's been asking the view on Power Grid for a position trading. Raja, what is your view on Power Grid? I mean, the stock has barely moved in the so far this year, but from a levels front, what can we watch out for Power Grid?
Yeah, so the power sector is largely having some, it gets periodic injections from the government, and that's when you get the, rise in the entire sector. So yesterday we saw a good move from BHEL, and that actually can now set catalyst, be seen as a catalyst and trigger some moves in the other power sectors as well. But right now, when you take a look at Power Grid, it's in a major consolidation phase, and when stocks are in such phase, it's better to see some shoots of green at least for me to consider that there can be a buying opportunity, because right now it doesn't augment any kind of scenario. So I would say that a move about 295 is where we can start expecting the bullish momentum to emerge and sustain.
Okay, that's the view for Power Grid. We have Ajay who's also asking the view on Saxoft on how the medium-term charts look for the counter. Of course, Raja, if you look at the charts, the stock has been oscillating at about 180 to 190 levels, and it has dipped from the July highs of 247. So, can we expect it to reclaim those levels soon, or how does the medium-term prospect look like for Saxoft?
So when you take a look at the entire IT scenario, they have been quite mixed. And Saxoft, especially after its strong run more than a year ago, sorry, in July, since July, the stock has been on a declining phase, and the IT space itself is not witnessing that aggressive buying which we are seeing in certain other sectors like say metals or auto. So one has to wait a while and wait for the momentum to reappear. So as of now, it's an avoid.
Okay, as of now, it's an avoid for Saxoft. All right, let's take another viewer query. Then we have Preeti Singh who has been asking the view on entry in Sagility at the current levels for medium term. We also have CSAT who's been also Satya is also asking whether it's prudent to hold Sagility for another year or so because he's bought the stock at about 45 odd levels, and he's asking what is the next level that we need to observe from here on. Sagility 45 odd levels, he has bought it, and Preeti is also asking the medium term prospect for Sagility and whether it's a right price to enter. Yesterday we did see the stock hitting a record high on the back of its second quarter performance. Raja, what's your view? Good buying price at the current price, or and
Yeah,
what are the levels that he can hold on for?
Sagility, considering your purchase it at 45 and the current price which it is trading at, so it has given a fantastic return. So looking at the overall market scenario and also looking at the prospects, some profit booking is advisable. And when you take a look at the company has been able to hold on largely because of its structure, where majority of the people whom they are employing, they are not affected by the H1B result. Even yesterday, the MD and CEO, he said that he is not getting impacted much by the H1B norms. So that is what is helping Sagility sustain, and they are given a better Q2 performance. And all that has impacted the prices. The stock has undergone a major consolidation similar to Power Grid, but now it had already started showing some tractions from the levels of around 50, and now with the current highs of around 58, it is clearly seeing a overextended move. So some profit booking could come in, and if you want to buy it again, the levels would be at 50.
Okay, all right. Let's move on and talk about Indegene. The stock has been in focus today, and we also have a viewer query by Satya. We did see in the second quarter that the net profit has risen by about 11% on a year-on-year basis. Revenue is also up by about 17% on a year-on-year basis. Raja, let's get in your view for Indegene. The stock has been an underperformer so far this year, but what can we watch out next?
Yeah, so when a stock is not performing despite all the kind of momentum, then the one has to understand that there is not much participation happening. So buy on dips is advisable, but I would say that buy on dips in stocks that are showing some steady movement. Say maybe say 3 months back. If 3 months back, if the stock has been able to hold on and been showing some green shoots or some showing it's on a steady rise, for example. So if you take a look at Indegene, it has not been able to move at all over the last 6 months, and which is not a very comfortable sign. So I would say that this is a clear avoid from my side.
Okay, clear avoid from your side for Indegene. All right, let's take a look at another viewer query. We have Geetu Sandesh who's been asking for Suzlon Energy and whether it's the right time to accumulate the counter. Of course, the company will be reporting its second quarter results in the first week of November, and we did see that the stock had seen a jump after the new CFO appointment as well. But yes, Raja, from a trading perspective, how does Suzlon look like for you?
Yeah, see, stocks like Suzlon, Vodafone Idea, R Power, these are stocks which I suggest that Yes, it looks nice when the move happens, but then majority of the time the prices are always sulk. So it's a clear avoid from my side. It looks it's made a nice rounding pattern. See, technical charts are one side of the story. The other side of the story is how much time do you got to wait, right? Last 1 year, market has taught us a very important thing, that are you willing to wait? And if you're willing to wait, you'll be rewarded. So either you'll be rewarded, or you have to hold on to the stock because your capital is down by that much percent. So Suzlon Energy will give us say 1 or 2 day of green shoots, but then majority of the days it spends the day in red. So such stocks I do not recommend or trade.
Okay, you won't recommend Suzlon Energy as of now. But yes, let's address one of the top Nifty loser today. That is your NTPC, where the net profit is up by about a flattish 0.1% on a year-on-year basis. Revenue has also grown quite modestly by about 3% on a year-on-year basis, and that is why the street has not been appreciative of the second quarter performance. But yes, so far this year also the stock has barely moved. And Raja, what would you suggest investors? A clear avoid for this as well?
Yeah. So today's highlight has been all sideways stocks. So
All right.
NTPC again, you can see ever since it started declining somewhere in the month of April, and May till now it has been in a sideways phase. Yes, if one were to buy into NTPC, if it is of your interest, then 350 will be the level I'll watch out for.
Okay, okay. But since you mentioned it's the highlight been of sideways stock, let's talk about Samman Capital. We have a viewer query by Alex. He's asking for a long entry on the current price. The stock has moved out of the FNO ban, and that's why we can see some buying interest, 2% gains coming in for the counter. And so far this year also the stock has moved quite spectacular. But yes, how does the stock look like on the charts for you, Raja?
Yeah, the stock is looking quite interesting, and especially after its name change, the stock has come out of its shadows and it continues to do well. It's a stock which one should have as part of their investment portfolio, and target of this could be closer to the region of around 280 within the next 1 year. It is definitely poised for some upside, strong upward momentum also shaping up. So yes, it looks a good buy even on the higher time frames.
Okay, okay. All right, with that, we have to let you go, Raja, but thank you so much for your time and connecting with us.
Thank you. Bye. Good day.
All right, all right, let's take a quick check of the markets or where we stand as of now. If you look at Sensex, it's up by about 200 points, and Nifty is also up by about 48 points. So we're seeing a recovery at this point of time because Nifty is back above that 25,900 mark as of now. If you look at from a sectoral perspective, Nifty Auto has been doing well, 0.5% gains coming in for there as well. Bank Nifty continues to remain in the negative territory. Consumer durables have also picked up the momentum. And if you look at the Nifty Pharma index, that is quite flattish in the trade as of now. But yes, all in all, we have seen a good and steady recovery, and we'll watch out for the second half of the trading session. If it marks for a good session, and of course for the week as well, it could be the fifth straight week when the Nifty has ended in the positive territory as well. But yes, the broad end of the markets, they show a bit of a resilience. Both the mid cap and small cap indices showcasing a gain of about 0.3% as well. And from a sectoral move perspective, if you look at the Nifty IT, there is a little bit of momentum that has started to pick up there, and Nifty Realty also showcasing a gain of about nearly a percent as of now. But yes, before we move on to our next guest of the show, let me once again introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Anshul Saigal, market expert, joining us. Anshul, good morning. I mean, how does the market structure look like to you? I mean, every time we hit the 26,000 levels, we're unable to sustain those levels.
Morning, Lovisha. Pleasure to be with you. Yes, the markets have been volatile of late, and this is somewhat of a hangover of the last 3 months, where you've seen so much macroeconomic news impacting markets that markets have been, very nervous at this time. However, if you look at the structure of the markets, where on the one hand, the macroeconomic indicators of the Indian economy look quite robust. But on the other hand, you have news which is adverse. For instance, the tariff news, the geopolitical tensions, and stuff like that, which is holding the markets down. This news, most of it, the negativity of it, is priced in into prices at the moment, with the small and mid caps really taking a beating in the last few months. Now, if any positive development were to happen in this news, that will be taken positively by the markets. In our judgment, the downside is probably in, and all the earnings related upsides, as also the positivity in news, which is likely to come about in future, is likely to play out in the markets. So the risk reward looks favorable at this time.
Okay, okay, all right. Anshul, we are seeing that the China has been solving the trade deal with the US, but how does India stand at the current juncture when already the fund flows aren't favoring them that much?
Yes, the fund flows have been adverse not only in this time of tariff uncertainty, but prior to that as well, fund flows were actually adverse for the Indian markets. Now, if you look at FII holdings in India, they had peaked out at around 23-24% of the Indian markets some 4-5 years ago, and that number is down to about 15%. Also, if you look at how FIIs are positioned in India, they are net short, and that again tells you that there is a bearish sentiment which is built into their trades in the country. Uh, with this sort of a positioning, any positive development in the markets, or in macroeconomic indicators or in news, is likely to see a short squeeze, and markets are likely to go up. Also, at 15% holding of the markets, it's very likely that from here, incremental buying over selling is going to be favorable of the FIIs. And that again bodes well for the markets. So, at the margin, while we are not overly bullish, but at the margin, it looks like the setup looks positive for the markets.
Okay, okay. Anshul, but how does the second quarter look like and how is it panning out for you? I mean, any sectors that you're watching out from the growth visibility point of view?
Hi, Lavisha, it's been a sort of mixed bag this quarter. If you look at some of the discretionary consumption companies, around the time of the Independence Day speech of the Prime Minister, he had indicated that there is going to be significant reform in GST. And as a result, our belief is that stockists had held back their stocking of stock, hoping that if GST rates get cut, it's then that they will stock onto their products. So last quarter, as a result, has been slightly weak for discretionary consumption companies. But we estimate, and in our channel checks, it does look like going forward, for discretionary consumption companies, times are going to actually turn. Then, if you look at infrastructure related companies, even to the extent of cables and wires, their numbers have been quite robust. The banking and finance companies, some of them have delivered very robust numbers. In fact, IT companies, where again there was anticipation of weakness, even those companies have delivered robust numbers, some of them. So there is a mixed bag kind of situation at the moment. But hopefully, as we move ahead into this year, the second half of this year should be quite robust.
Okay, okay, all right. But yes, we did see after the GST cut announcement, majority of the autos, consumer durables names, they popped up in the trade. But do you think that is much of the rally overdone already in the discretionary theme, or will we see, further ahead in the second half of the fiscal year?
If we, Lovisha, go back to the period of COVID and look at how consumption has played out since then, consumption has been quite tepid. Whether it is QSR companies, discretionary consumption, all of that has been quite tepid. Mainly because households had utilized their savings in sustenance, and they weren't going out and buying discretionary products, not as much as one would have actually liked in the economy. Now, one quarter here or there really doesn't make much of a difference. But is the question should be: is the tide likely to turn for the future? And is are events like the GST sort of rationalization and the tax cuts that the government has put into play, are those going to be triggers for a cycle of consumption going forward? In our judgment, this takes some time to play out. That is, if tax cuts have happened today, consumers start consuming 6, 8 months down the line. As also the same for GST. If that acts as a trigger for consumption uptake, then this is not going to be a 1 quarter, 2 quarter story. This is going to be a revival of animal spirits, which is a rolling phenomenon, and that goes on for a long period of time. So we wouldn't be so excited for a spurt in stock prices in a quarter or two. But what we are excited by is the bottom being made on consumption, and consumption coming back strongly as we move ahead into the next few quarters.
Okay, okay. Anshul, let's specifically talk about the cement space as well. I mean, we are seeing some resilience in this quarter as well. Last quarter was also quite a beat performance for the cement sector. But going ahead, given that the month of October is a seasonally weak one, how do we see this going ahead into the second half of the fiscal year?
Um, so cement has been weak for a variety of reasons. For the last two, I mean, in the past, of late, the turnaround is quite evident. In the past 2 years, what one witnessed is that there was consolidation in the industry that impacted pricing stability, and also cost pressures were playing out. So margins in cement companies were actually contracting. Now we are at a juncture where most of the consolidation is behind us. Two large players have gained majority of the market. Cost pressures have also eased, and pricing stability is coming back to the industry, which you rightly mentioned is evident in the last 2 or 3 quarters. Now, if we look at this setup, and for cement sector, a consolidated pricing phenomenon of cement stocks for the last 2, 3 years, it does look like this is an attractive sort of sector to be in at the moment. And going forward, cement tailwinds are likely to play out robustly.
Okay, okay. Let's also discuss about the return of the private capex, because we are seeing good numbers coming out from L&T and BHEL as well. The order of inflow has been quite upbeat, and for the second half also they are predicting that L&T particularly has been predicting that they will be beating their growth guidance as well. But so what does this mean for private capex in India? Does this mark the return of it?
Again, it does look like private capex, which has been weak while public capex has been going up. It is private capex is on the mend. Now, if you look at all the results that you mentioned, it's quite clear, particularly in the case of L&T, that order book inflow has been quite robust. As also BHEL has indicated quite a robust order book inflow. Now, if one needs to break down why this is happening, it's quite clear that the capacity requirement in power and that revival of thermal power capacity coming into play is what is leading to particularly BHEL's order book going up. In other instances, it is capacity creation which is really taking private capex up. Capacities are nearly full, and private companies need to add to capacities because of consumption pickup, which is likely to happen going forward. And take all of this together, it does look like private capex is on the mend, and that bodes very well for the economy as also for the equity markets.
Okay. Right. Anshul, let's get into your views for the IT sector also, because earlier several of the experts have pointed out that it could be a contra bet in the current scenario, given the sharp fall that stock prices have seen, valuations remain favorable, and majority of the IT companies have also reported better than expected second quarter performance. But do you find growth visibility there going ahead?
Um, if you look at again the IT sector, clearly there is bearishness in that sector. I mean, a stock like TCS, for instance, down from 4,200 to now somewhere close to 3,000. So also, if you look at the other bellwethers, that's really what's played out, and for good reason. These were companies which were trading at 30, 25 times price to earnings for growth expectations of 2 or 3%, in some instances, even lower than that. Now, if we see the correction in price as also the consolidation over a period of time, maybe most of the adverse news as also adverse action on earnings is reflected in price at the moment. And any positive development, as we all know, these companies are quite linked to how the U.S. economy does. And if we are going to see interest rate cuts in the U.S. economy, and as a result of that, growth fillip there, then that will have a ripple effect on these companies as well. Their order booking should also pick up. So these companies on a bottom-up basis, stock by stock basis, may become interesting going forward, just on account of the differential in growth expectations and valuations at the moment.
Okay. Arjun, just one last question before I let you go. I mean, you did mention about the US economy and of course the interest rate cut as well. Yesterday we did see that the Fed indicated a rate pause that could be likely for the month of December. But what are your estimates? Is the Fed going to continue with its interest rate cuts going ahead?
I mean, all I have guiding me is the eccentricity of President Trump. He has been quite vocal in telling the Fed that they need to cut interest rates. He's pushing for the economy to go all cylinders up, and it does look like the Fed is obliging for the moment. But they did also say in a hawkish tone that don't expect that going forward the same cut in interest rates will be played out. That is in December. But by and large, it does look like the interest rates don't have room to go up. At worst, they'll stay where they are, and at best, they'll keep going down. In which scenario, the US economy is going to look very robust going forward. And I mean that the trajectory of the US economy is going to be up. Also, the tariff situation is an interesting one. While the US government has collected tremendous amounts of tariffs from the application of this tax on various companies, they may use this capital to lower interest rates, lower tax rates for the public in US. Now, if that were to happen, you will have both a fiscal and a monetary stimulus in US, and that should be quite interesting for the US economy. And as a result, that engine of growth for the world economy might just see tremendous pickup in growth going forward. So again, on the US, one should be at the margin more positive than not.
Okay, all right. Those are the cues that we need to watch out for. But with that, we have to let you go, Anshul. And thank you so much for your time and joining us.
My pleasure. Thanks, Lovisha.
Thank you. All right, let's take a quick check of the markets or where we stand as of now, because we did start off with a choppy market, but we did stage a recovery from those levels as well. Nifty is back above that 25,900 and we are continuing to hold those levels. 0.2% gains coming in for the Nifty 50 index. Let's take a look at some of the other sectoral pockets of how we are faring as of now. Nifty Auto Index continues to remain in the positive territory. Nearly a percent gains coming in for the Nifty Auto Index. Nifty FMCG is also showing a bit of a resilience, 0.5% gain coming coming in for there as well. PSU banks, like we were talking with earlier experts as well, they've remained, one of the strong comebackers of this year. Past 2 months have been quite resilient for them, and today also they're showing quite a bit of a resilience. 1% gains coming in for the PSU banking index. Nifty Realty also doing well with about a percent gain. Nifty Consumer Durables also holding up well with about 0.4% gains as well. However, what is not doing well in this recovering market, that is your metal stocks seeing a bit of a profit booking. Pharma stocks also remain under pressure as of now, and the healthcare stocks also remain under pressure as of now. So yes, both of these pockets continue to remain in the negative territory. But yes, the broader end of markets, both of them showing a bit of a resilience, and they continue to remain with about about 0.3% gain coming in from the broader end of the markets as well. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 p.m. for closing, and we will be understanding how the market is developed with our experts. We'll also be discussing the stocks that grabbed the headline. But until then, signing off, and do stay tuned to moneycontrol.com for all the news updates and market insights.